Welcome back, traders. AMC and GameStop approach a critical decision point on the charts. We've been here before. History doesn't repeat, but it often rhymes. And before we jump into the charts, a quick news article from CNBC.com. I will go ahead and pin this in the comments down below if you want to check it out yourself. It says right here, because the canal was blocked by a ship for a week, experts warn the supply chain impact could last months. I do believe we saw a direct impact on the share price of CTRM, Castor Maritime, one of our Wall Street Bets plays, which is a shipping container company, essentially, okay? So this is perhaps why we saw a dip on that over the last week. It says right here, more than 50 ships per day on average pass through the waterway, accounting for around 12% of global trade. So that's a pretty big event. Speaking of the YouTube trading portfolio, here's our CTRM position. I went ahead and doubled down on the dip and up my shares from 250 to 500 shares of CTRM. And 500 shares of NAKD on the NAKD dip. I was able to lower the cost basis under $1 for each of those assets. NAKD cost basis now is 99 cents. CTRM, it's at 90 cents. Feel good about those average entries. And to begin with the technical analysis, we're going to start with the German charts today, because those markets are popping already. Shout out to our German friends overseas holding AMC. And it's green on the day currently for Tuesday. These markets are open before the US markets. So it is perhaps a good indication of green to come into the US markets opening Tuesday. And there's some interesting patterns here on the long-term simplistic chart. So the first important line I'll put on here is down here like so. This is going to be the long-term support line currently. And not only that, there is another long-term support trend line coming from way back. And we see that in the US markets as well. But it does indeed align even better on the German charts. This is AH9 ticker. So when I place it there, it does perfectly match up with the last previous bottoms. So it is a very much valid trend line at the moment. It's holding strong. And I do expect that to continue on this chart. And hopefully that's what we see in the US markets as well. On the US markets, we did see a stronger sell-off. So that trend line actually broke through slightly, like so. Either way, the candles are above, closing well above this line. So here's the US markets, and this is the part I was just mentioning right here where these candles touched down. It broke through that support line. It appears to be a bear trap at the moment. Now on the US markets, here's the long-term support line. It's actually a little higher coming from these candle wicks back at the previous breakout. That's our major line of support and resistance right now. And is currently support as the candles are still closing above that on the US markets. And right now is a daily candle. It is an indecision candle. When we've seen this before, it's led to some pretty big moves like down here. It doesn't matter that this one's red and this one's green. The color's not as relevant as the shape here. So taking a projection based upon this previous breakout, where might we be heading? jump into the day trading chart to show that actually, but just once more, remember the old sell box? I put the gap target in here. That is why we saw partially this rejection up top. It was not only panic selling, it was also profit taking from this fib target up here, around $14.50. Now it's returned to the previous Fibonacci support area, and it has bounced from there. It's holding above the moving averages on the long term as well. And the indicators align with that too. So on the MACD, there's something to note here. I know there's a lot of previous lines. The main important part that I was showing previously was this bullish continuation on the momentum. We have seen that it's currently red from that dip. However, looking at the last bearish momentum that came through, all right, let's count them. Now we have 1, 2, 3, 4, 5 big solid red bars coming through, and right now 1, 2, 3, 4. Okay, now jumping back to the German markets real quick. On the German markets MACD, excuse me guys, I was streaming for 5 hours this morning. My voice is a little dry. Take a sip of coffee real quick. So, as I was saying, in the German markets for the MACD, what's interesting here is because the market's already open for Tuesday, we see a new bar coming through here. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. We see the 5 red bearish momentum bars coming through that we saw last time, the same exact number, and right after that it did reverse. That's what I'm expecting here as well. So we just have 4 right now, but as soon as the market's open, we'll get that 5th one, and it's looking like it's going to come in red and then potentially fade out into some green momentum in the future. The RSI continues to hold as support too from this trend line. We're expecting a bounce from about here based upon these previous touches. We haven't seen that yet, but it is in formation. It appears to be curving upwards from this point. It has not rolled over yet. So, to wrap things up with AMC, is a rough projection, and the way this recovery is looking is pretty bullish. So this may turn into a bigger breakout here. It may be pretty swift, pretty quick move. This is the green box is a box of consolidation on a swing trade. You would want to wait for confirmation either above or below this box here, or some sort of extension, some sort of impulse up or down. Now let's assume it's a bullish breakout. I do think we could push well outside of this parallel channel very soon here. And if we were to do that, I'm going to take an estimate based upon the previous run. So I'm going to literally copy this price action and bring it over to where we are now. And look at that. It does align very nicely with our supports and resistances here. Our parallel channel. Something like so. We could see a nice push up just above our last local high, around $14.50. It's call it 15. Could see a nice impulse up to $15. Slight correction, retest some of the support, and then a further breakout into next week. Now for GameStop, well, we have another indecision candle on the daily as well for GameStop. The pre-market hours are open right now, and it hasn't moved much from there. We're not seeing a lot of volatility before or after the intraday market hours. The price is hanging pretty steadily in this area right now. It's getting ready to decide very soon. The longer it holds this level, the closer we're getting to some kind of extreme up or down breakout. And the end of this part is approaching the giant magic wedge, magic triangle on the higher time frames. So when I zoom all the way out, it's very clear that this line is completely relevant right now. And until we see a retest up here somewhere, or over here, or even down here, until this upper resistance trend line is completely broken through clearly and concisely, until we see that happen, this chart remains bearish in the midterm. Now, it's moving very quick, and this dip may have been a local bottom. It wasn't the worst entry. If that's the case, it's a higher low being put in right now, potentially another one to come in the future. So it's not all doom and gloom for GameStop. It's definitely not. The battle's not over yet. I'm not convinced it's gonna dip again just yet. But even on the short term, we have a very tight consolidation going on in this green box, similar to AMC's little box of consolidation for a swing trade opportunity. The best move is to be patient, waiting for a confirmed breakout above or below this box. And it hasn't done either one yet. Not only that, it's got an extreme amount of resistances working against it to hold it down right here, right now. So until GameStop starts to push above all these resistance lines in here, that's really what we need to wait for the beginning of a confirmation of some sort of trend change here. Until then, it is indeed still in a downtrend overall. And this chop is just the amount of volatility and risk that we're seeing in GameStop right now. It's still a risky entry. It's still a risky exit from this point. It will take some more time to see what happens in this area over the next week or two before really having any kind of conviction on the technical indicators for the GME chart. Not only that, the RSI for GameStop, the trend line on the RSI is actually much lower on GameStop than it is on AMC. So it's still a valid trend line, and the price is above that right now. The green was our projection from earlier, a week or two ago. And we saw it dip somewhat, but it still does have some room to the downside that it could go on the RSI before seeing a bounce from that trend line. If it's very bullish, it absolutely could continue from there, but it is a little bit early on that signal. And lastly, Here's our CTRM chart. As you saw, that news article appeared somewhat bearish, shut down the shipping in the Suez Canal for a week, which is a large shipping channel for imports and exports, and there's a high chance, high likelihood that that's the selling pressure that we saw right here throughout the past week coming through on the CTRM chart. Perhaps if that never happened, it would have kept going from that point upwards. Since we did see that sell-off, that's why I doubled down once more on this long-term support line. It looks good. If this resistance line is indeed the important valid one of this long-term trend line, then what we have here is a breakout, a retest before a push higher. Awesome. Thanks a lot for watching. Hope you enjoyed that video. Have a great day and happy trading.